Hello and welcome to today's market update. Today is November the 16th, and my name is David Vigil with NeoTrader.com. So a few days have passed. If you watched the last few videos, you've seen that we have filled an exhaustion gap, which we thought would occur, and we had mentioned that if it did occur, it would occur with a lot of price action to the downside, and it did. Before we get into the market update, I was thinking earlier today, there's a lot of folks on YouTube who post videos about market analysis and forecasting, and usually they're kind of boring. So I figured, why don't we change it up a little bit? Usually when I do the forecasts, I have usually finished with some of my graduate classes, and I settle down with a glass of wine, and I figured, hey, why not share some of the wine that you're having that night whenever you're doing the market forecast. And tonight we're drinking Estancia, the 2008 Merlot. It's a little young. It's not too bad, but it's not a great wine. But I think it was a $12 bottle, so it's okay. I mean, if you want to try it out, then I'd suggest you do so. But anyway, if you do have some wine suggestions, leave me some comments, because I noticed that I'm not getting a lot of comments, and I figured, if it's not market action, maybe it could be wine action. So anyway, let's go ahead and talk about the markets. So we're going to revisit the SPY, or the S&P 500 ETF. Last video we talked about this exhaustion gap, right, and how a breakaway gap occurs at the beginning of a trend, a runaway is at the middle of a trend, exhaustions are typically at the end, and I had mentioned that I had thought this was an exhaustion gap because it demonstrated some characteristics, and the rule was if it fills itself within 7 to 10 days, then it's an exhaustion gap, and sure enough it did. And you see here, it did with quite some price movement today. So it's a few updates. This 2002 closed below that, right? Yesterday held some resistance. Today had no respect for it at all, or excuse me, support. And what we see here is a breakaway gap. Now, we talked about gaps in the last video. We'll see where this goes. So what we need to ask ourselves is, where is the support levels? Now, if you're a subscriber to IBD, which if you go to NeoTrader.com, I have a link there which will offer you 4 weeks for free. They announced that the market was in correction. They basically have a rule that if you have 4 distribution days within a 20-day period, market is in correction. Today would have marked the first day that market was in correction. So it confirms a lot of what we had been talking about. In earlier videos, I had talked about tightening up stops. If you did it, then good, you locked in some great profits. If you haven't, probably not a bad time to do so now. In terms of a retracement, we're looking at price levels retracing down to this 50-day moving average, right, which is at 1668. More than likely, it's going to land at 115.63. Or if it penetrates the 50-day moving average, then we're looking at the 200-day moving average, and I have prices forecasted at 112.50. Now let's go to the diamonds. Now, one thing I want to point out on the diamonds, and it was the same case for the S&P, is if you watched a few videos, we were looking very closely at this MACD that I have set at a very long period. Talked about there a crossover here, right, and then a possible blow-off, which was the exhaustion gap, and now we have a definite and sound crossover here. Now, as I mentioned before, this MACD tends to indicate long trend reversals, right? Like here is the April trend reversal. I'm going to go down, and so we see a lot of it's fairly significant whenever this crosses over. So where do we expect the Dow to go? Well, we'd expect a healthy pullback, right, to 109.38 to 107.03. Now, just as we have a trend regression channel up, we can now draw a trend regression channel down, and once it breaks, this will signal the time to go in. Now, you notice here is I have this internal trend line here, and it found support right at that internal trend line. Okay, so we might hold. Chances are we're going to have an update tomorrow, not to be more than 68% of this range here, right? And we expect prices to go to 109.38 to 107.03, which if it hits 107.03, then we'd expect it to find support on this lower trend line right here. Okay. Now, let's go to the Qs, and with the Qs, I had given you some exposure to some advanced studies. Now, if you go to neotrader.com, we're going to have several videos that explains this type of analysis. We're not there yet, but it's coming soon. So I drew a Fibonacci circle around here, right? And we found resistance here. And if you watch previous videos, I go into a little bit more depth about how this is drawn and how some folks, unfortunately, use it incorrectly. But so this is the NASDAQ and the ETF. Prices are declining pretty steeply, right? We expect support at $50, and then if it penetrates 50, which is also its 50-day moving average, or pretty darn close, we're looking at prices at 208. Now, what I would expect is this. I would expect prices to come down, hit this line here, okay, and then attempt a new high here. Now, the common question is, do you short this market or do you go long this market? Well, it all depends. So if this market fails here, then this is a shortable market, right? But I typically won't short the market on this first leg down. What I like to see is the leg down and then up and then back down again. So right now we're in a stage where we're looking for a trade setup. Right now would not necessarily be a trade setup. So in IBD right now actually says do not commit any money long. I would also say do not commit any money short right now. We're in one of those areas where we're trying to figure out what the market is actually doing. Let's go ahead and go to the precious metals real quickly. And we're at silver. Like we mentioned before, silver had traced down. I had initially thought this might have been a runaway gap. It hasn't shown itself yet to be an exhaustion gap. It filled the gap, right? But price haven't broke through. If it breaks through, then we might say that it might be an exhaustion gap. If prices hold, then we can see that the new price level would be 29.68 to 30.20. We're going to keep our eye on silver. Again, one point of interest, if you look at the MACD here, right? So we've seen a crossover, it held, and another crossover. However, we did not see negative divergence here, which leads me to believe that silver might have some more highs in store for it, but we'll keep an eye on it. Gold is very similar. However, gold has not confirmed. It does have some negative divergence here, which makes me skeptical of silver's move. Here's what I think is, I think that silver still may rise despite gold going down just because it's cheaper for retail investors to invest in. So if retail investors are pouring more money into it, it'll definitely signal a top in the precious metals because usually retail investors are the last ones to the game. So again, we'll keep an eye on it. Now let's go to the euro. And there's been some very interesting analysis with the euro. If you watch previous videos, we've explained this move here, and we've explained this move here. And we talked about a possible retracement down. And we're to 33.90 is our spot. Today's low, and this 33.90 was forecasted in a few other videos, if you look back. This low is 33.96. So again, 6 cents off, not too bad. We'll take it. We expect prices to rest on this lower trend line here, right? If it breaks, we're looking at 33.19. Again, not a short. What we probably want to see if it breaks this is a retracement back up to this lower channel line and then a breakdown again, and that's where we get really interested. Now, the UUP, if you recall, we looked at this several videos ago. It broke through this resistance level here. It's riding up this trend line here. Short-term support was 23.05. We had a price of 22.99. If prices exceed it, we're looking at 23.44 for the short term. And from there, there's a good probability that the dollar will actually rally against major currencies. If it does, then we would expect that the commodities markets and the equities markets would decline pretty significantly and test that 62% level. Anyway, that's a market recap for today. Thank you for joining me, and if you have any wine suggestions for me, or you want to talk markets, feel free to leave me a comment. I look forward to hearing from you guys. Take care.